Thanks everyone for tuning in to today's presentation. We'll give it just another minute here. Hope everyone's doing well, having a good week so far. I apologize, I got a bit of a sore throat, so you might see me coughing in between. Give it another 30 seconds here and it'll kick off. All right, let's do this. Again, thank you everyone for tuning in today. For those of you that don't know, my name is Shafin Tejani. I'm the CEO of Victory Square Technologies. Victory Square provides investors with a liquid way to invest in early stage technology companies without buying a venture fund that requires accredited investor status or multi-year commitments. We were founded to fill the early stage investment gap for a broad range of investors. We provide VC investment access to the next generation of tech companies in an audited, transparent, and liquid investment vehicle, effectively democratizing access to the next generation of the best startups. Victory Square is your key to investing in a portfolio of some of the world's most innovative and disruptive early stage technology companies with the purchase of VST shares, which are publicly traded on the CSE, the OTCQX, and the Frankfurt exchanges. Before we get started, I just want to share a quick snapshot of Victory Square for those that are new or haven't tuned in before. At Victory Square, we have a portfolio of approximately 25 plus next generation companies that are from all over the world. The sectors that we focus on are digital health, AI and artificial intelligence and machine learning, blockchain, virtual reality, augmented reality, and mixed reality, gaming, and climate tech. Most of our portfolios fit in, into those categories. Since inception in around 2017, our NAV, our net asset value, or assets under management, have grown from around 4 million to about 85 million as of this month. So our equity stakes are worth about 85 million. For those of you that follow our share price or market cap, that's about 6 times higher than what our market cap currently is, which I think was around 14.5 or 15 million Canadian. So it's a great entry point. Our share price right now on the CSE is around 17 cents Canadian, which translates into about 86 cents a share of assets or holdings currently. For most microcap stocks, there's always a concern of dilution or needing money. In our case, no concerns for dilution. We've got access to over 24 plus months of runway. Our cash and liquid securities are probably around 6.8 million, and we've got access to a convertible note that I'd set up previously for the company, which we've tapped into in the past. So no challenges with funding or concern about dilution for VST. And strong inside ownership. So inside ownership is around 15%, which is myself, and then there's some management, and then our VST ecosystem of portfolio companies also hold some of the VST shares. So very strong insider ownership and aligned values. So again, as investors are looking at the company, we've got real skin in the game. So I know most people hate the intro, so I'm going to try to cut it short and go straight into today's webinar. So in today's webinar, we're going to focus on the NAV. So I'm going to, start off by walking you through how we calculate our NAV. I'll give some illustrations as to how that NAV has grown from, 2017 inception to today, kind of referencing what the growth rate has been since 2017. We'll talk a bit about, the fact that our NAV is trading at a discount to our current, our market cap is trading at a discount to our NAV, and then we'll open it up to Q&A. So let me share my screen. Second. So can everyone see the screen okay? So, we get a lot of questions that are asked around our NAV. Okay, so this NAV is usually at the beginning or end of every month. We track we track our NAV, and our portfolio is broken into kind of three separate categories. And those categories are public companies, private companies, and incubating companies. There's three ways that we generally get valuations, as a method of how we do this. There's generally, for the public companies, it's mark to market. So all we do is look at the number of shares we have in that company, and we multiply it by whatever the share price is. In some categories, we'll do an overall discount, given that some of the companies may be illiquid. For the private companies, we use a couple of different methods. So our auditors require us to bring in a third-party pricing agency to evaluate the private companies. And there's a variety of information that the private companies have to provide to the third-party pricing agency to determine a value on those companies. We also use last transaction or last financing, and in some cases we use a management reviewed number. Most of these, like I mentioned, we do it at the end of every month, beginning of every month. So these numbers are kind of reflective of closer to May 31st or June 1st, of 2023. We'll update it again at the end of this month. And just to note, the end of June is also the end of Q2 for VST and a number of our portfolio companies. So let's start with just looking at the public companies. One other thing I just want to touch upon, we've had some really good advice given to us by Ben Baker and some other shareholders that have shared feedback with him, that if we could put a portfolio tracker onto the website. So we're working on doing something like that so that investors can track this on a more regular basis and not have to wait, for the NAVs, because usually we publish it quarterly, but I think it'll be helpful for investors to follow this on a better basis. And we've also been asked about the number of shares we have in companies. So in the public companies, it's easier to do it through the tracker. So for as an example, if you look at our public companies, and let's look at Hydrate, for example, this will show the name of the company, the industry, so the sectors that it's kind of focused on, the number of shares that Victory Square owns. Now these may be approximate, give or take a little bit in case something has changed since the beginning of June, and the price on, let's say, May 31st or June 1st, and you'll see that Hydrate, the value of VST's ownership in Hydrate right now is approximately $19.8 million, and the valuation method was mark to market. So, and so this is the case on, if you look below, there's XR Immersive, Fans Unite, it's Cloud9, which has changed its name to Anon, Game On, Turnium, Flora Growth Corp, and Covalent CQT. Now, one of the things that we've been asked the question in the past about, with our holdings, do we sell our holdings? Normally, we're long-term on most of our companies, but we have a strategy that generally what we like to do is to recover our principal plus 20% of a 20% lift, and then we kind of ride the rest. But we sometimes, as the companies get spin off, like to structure a way for us to get some liquidity that we can then go and put back on top of funnel on new projects that we're incubating. And we never like doing that at a discount. So, we try to do that when we're in, in significant money on some of those portfolio companies. There's also circumstances, like in the case of Hydrate, where, we incentivize staff, contractors, and also sometimes use shares instead of cash as a currency for Victory Square as well. So in the case of Hydrate, as an example, the company has achieved significant milestones, exceeded what our expectations were. And so you may see us, our position, decline a bit, not significantly, very minorly, where we're either, rewarding staff or Hydrate team members for achieving certain milestones, or we're using the shares as a currency, in some cases, as opposed to using cash. Now, obviously, we're bullish long term, so in most of these companies, we want to hold as much as we can, especially in the example of Hydrate, because for us, like a lot of investors have probably heard me mention, that is a key part of our portfolio. So And then if you look at, Hydrate represents about $19.8 million. That's again, our share price multiplied by our number of shares multiplied by the share price as of June 1st. And then if you look at the combined value of XR Immersive, Fans Unite, Anon, Game On, Turnium, Floor, and Covalent, you're looking at a total number of about 25.4 million, which is the value of our public holdings. So our current market cap is 15 million. Just the value of our public holdings is 25. So, there's a significant discount there and great entry point and value baked in. And for those of you that have followed our story, when you're looking at XR Immersive or Fans Unite or Game On as examples, because those are companies that we're more actively involved in, those companies are trading at significant discounts to where they may have been trading at their financing price in 2021, or even where comps for private companies in their space and sector are trading. So again, we're confident that this number will continue to rise. Then the next category of companies you look at are private companies. So these private companies are valued. There's a couple of different methods: third-party pricing agency, management reviewed. Now, when we do a management reviewed valuation, we look at a couple of things. One, we'll look at third-party pricing if that's happened and that's been the case. But we'll also go to resources like Angel List, or look at YC or other types of tech incubator median valuations on companies to determine what we think a value these companies should be. And generally, what we'll do is we'll also take a discount. So to give you an example, right now in the US, the median valuation for a pre-revenue, pre-seed company is about $10 million US, which is about 13.5 Canadian. We don't use that number. We'll use a number, maybe 2 to 4 million Canadian for pre-seed. So we use a discount on it, but we look at a number of different variables to determine that. And then we'll also look at term sheet or last transaction. So if a company's been given a term sheet, we'll use that as in some cases as a way to value what that company's at. Or last transaction if it's done a financing. So, here let's look at an example of Copilot. So Copilot, a company that's been in our portfolio since 2018, we're very bullish on it. Strong management team. They're focused on sales automation, AI, machine learning. Again, there's been some good coverage on them recently. They're one of a very few number of companies that received government grants and funding recently. And again, strong management team. That company, if you take VST's value, so this is not the valuation of Copilot, this is just the value of VST's equity in Copilot, it's around $5.6 million. Again, that's third-party pricing, agency reviewed. In some cases, for Copilot internally has a higher valuation, but for us, we take the one that is provided to us. So again, we're expecting that number to increase the next time it gets evaluated, just given the fact that Copilot itself is seeing a higher valuation on on the total company as a whole. So there's names on here that people will recognize, Victory Square Health, for example, that the value of VST's ownership in that has declined since 2020. So that number was higher. Anyone that's followed the story, there was a lot of attention and attraction on them in 2020 with their testing. And, that number is kind of, the third-party agency has kind of declined that number as that sector has declined in value. But again, it still holds value for us. We still are bullish on it. But anyone that's followed the value of that asset, it's decreased in value. So as the market reprices private companies, that also shows up on our valuations or how our third-party companies evaluate it. Victory Square Digital Health, I want to touch upon really quickly. This is a wholly owned subsidiary. This is a company that we don't talk much about. We don't share much about it. It's kind of in the background, but investors will hear more about it as it's our internal wholly owned digital health company that owns a lot of IP that we license out. And we're now starting to see significant traction around our online pharmacy, our weight loss platform, and our dispatch services within the digital health space that will be coming out. So again, this is an asset that we are confident, very bullish on. And this is also an asset that we intend to most likely keep wholly owned, because it's one of the assets that we've had a bit of a different focus in knowing that, okay, we've got these investments, we want these investments to materialize, but we also want to have wholly owned internal companies that can provide and cover burn or provide cash flow and revenue. And so VS Digital Health is one of those companies. I want to highlight one other company that people may have not seen this name before, the Future Health Company. This was Draft Label, which is one of the companies that's being spun off this year, hopefully very, very shortly. Discrete Care, which is our digital health platform around sensitive issues, is in that as well. But the company's been rebranded as the Future Health Company, and that rebranding, new brand information will be shared shortly. There's also another testing company in there I just want to highlight, which is a new company that people may not have heard of, Meal Test, which is, again, this is focused in Brazil. So anyone that's followed the Victory Square Health story in Brazil, we were able to use a lot of momentum that we had in that market to develop relationships with regulators. So Anvisa, which is kind of the example of Health Canada or the FDA in the US, distributors, manufacturers in that market to kind of really grow and expand on the diagnostic testing and online pharmacy sector and space. We're very bullish on digital health. The great thing about health is it's universal. It doesn't matter what country you go into. Quality of life and good healthcare is super important and a priority for many people. Whether there's a recession or the market's booming, people always want to look good and feel good and take care of their health. And so we believe we have a big, first mover advantage in that market. So that's a company that we've been incubating that's now, starting to gain some traction. And so there's other names on there that people have seen before: Creator.co, Next Decentrum, Stardust Solar, which is planning on listing. Now, I want to highlight the value of the private companies, of just the private companies. So you're looking at about $45.8 million. So if you're investing in Victory Square today, our market cap is 15. The public holdings are worth 25. So you're basically getting all the private companies for free if you're investing in VST today. So again, just a highlight on the private companies in the portfolio, the industries and sectors they're in, and valuation method, and again, like the value of them. And if you look at, again, the industries, you'll see digital health, you'll see automation, AI, machine learning, the creator economy, Web3, renewable, insurance tech, plant-based science, computer vision. So we've got a lot of seeds planted in a lot of different anchors, which is super important for us. Anyone that follows the microcap space, it's very thematic. So you see people get excited about certain themes at different points. The benefit for VST is we've got access to a lot of investments, and not just like 1% ownership. In most of these companies, we have a good size stake. The last category, is incubating. So in cases here, we have IP and other holdings. To give you an example of a couple. So when you look at incubating, so with the digital health space, Hydrate and Victory Square Digital Health and Victory Square Health opened up a number of opportunities for us. Let's take Hydrate, for example. Hydrate's business model is to provide at-home care services. It uses this physician and nurse network that they have all throughout the United States, their own pharmacy network and tech, and they provide this almost digital health business or mobile health business in a box for nurses. Now, that opened the opportunity to a variety of things. We were able to see other pain points in the healthcare space and sector that Hydrate had, distribution already set up, relationships and partnerships. So we've been able to incubate businesses internally based off of what we're seeing. So in Hydrate's case, nurses would get a number of different requests. Some of those requests weren't Hydrate's core focus, and there's so much growth in the areas that they're already focused on. So we said, hey, these are other big markets. Why don't we build businesses around those? So as an example, a hydrate patient might also have a pet. So we've been incubating a pet health company within our business. Now, it's not us just building something from scratch. We already have the tech, the pharmacy, but now we also have distribution and customers that have a request. So higher probability of success there. We've also seen that there's a number of opportunities around women's and men's health, but very, very specific. Women want to go to see a female doctor to provide feedback around specific women's related issues, whether it be PCOS, perimenopause, or just basically tracking hormones. On the men's side, we've seen things around testosterone replacement therapy, other types of supplements dealing with issues that men are having, but again, very, very focused on men. So these are businesses that are being incubated, solving a pain point that we already have distribution for. And then the other thing we've noticed, artificial intelligence, machine learning, it's become kind of a buzzword, but this has been around in all different types of companies. It's just been, coming to the forefront as, there's been a buzz specifically around, let's say, the equity markets around anything touching AI. But the key with AI is that you need to have a data set. And so one of the great things when you look at, let's just take, again, Hydrate as an example, or any of the portfolio companies that Victory Square has, whether it be Copilot, whether it be Hydrate, whether it be Game On, whether it be Fans Unite, they're all dealing with large data sets. So we're able to see ways to automate processes and learn patterns from that. So we're able to apply AI tools to a lot of our different portfolio companies, where we're focusing on specifically where we have a first mover advantage is in health, because we have such a strong presence in the digital health space. So there are some AI health tools that we've been working on and testing within our own kind of ecosystem with Hydrate, Victory Square Health, the Future Health Company, and our own businesses. Now, these valuations are all management reviewed. So when we look at these, we're taking a $2 million valuation for some of these companies, whereas if we were to go and raise capital on them, you'd be looking north of 10 on them. But again, very, very conservative with how we look at that. There's some companies here again that I want to highlight. You'll see cybersecurity has always been something that we've been working on. And again, as we've had more businesses in more areas, we're able to see certain pain points from a security perspective that we're able to tackle. And so we've got a company that we're spending more time on in that space called security, privacy, safety. And then we've always had exposure to fintech. We're seeing fintech in healthcare, fintech in gaming, fintech in the creator ecosystem. So where we saw a big opportunity leveraging our fintech experience was to go after a very, very specific niche. And this is in the creator space, but creators that would be more deemed higher risk, or let's say within the adult type category, or they're referred to as spicy creators. So this is a project that we'll be launching very, very shortly, which we've been testing. And again, we in our business, we see whether it's creator.co or whether it's, let's say, Fans Unite or Game On, they're in areas where sometimes banking is considered high risk, payment processing is considered high risk. And so instead of sending it to a third party, we wanted to build something internally here, again, for an existing pain point for an audience that we already have. There are a couple of other highlights here that I want to talk about. You'll see, Shell. So Victory Square is a public company. We already have more than 200 shareholders. So sometimes when we make an investment and the investment doesn't work out, we're able to rework that investment and convert it into a shell by doing a shared distribution to our shareholders. So one of the things we wanted to do as we look forward, we know that we may have other spin-offs in the future, or we might find investments that we can take an investment in and utilize one of our own vehicles for taking those companies public. We also want to make sure that in these cases, it almost allows us to bake in a shared distribution to our shareholders, because in order for it to be usable, it needs to have over 200 shareholders, and it's easier for us to do that by just doing a shared distribution to our shareholders. So from a foreshadowing perspective, like in knowing that, when we look back at the last 3, 4, 5 years as we've done spinouts, we know that we also want to create ways, and we know VST shareholders want to share dividends or to participate in future spinoffs. This is a way for us to kind of bake that in the future. And so there's a value that's placed on these technology shells that are kind of ready to go, that come with a potential investment as well. And so that's where you'll see, investments that we've made in the past, like Payvita, Powell Ventures, or Flow Digital. We're repurposing these, which has a value for VST, and also is a huge value for our shareholders because there's a baked-in distribution. Those residual IP and incubating companies have a value right now of around 13.9 million. When you look at the total, as of the beginning of June, we had our NAV at around 85. Now, that's up from 75, which I think was around which is where it was when we did the last webinar. And anyone that's followed the stock has seen that companies like Hydrate towards the end of May, beginning of June, Game On, Anon, some of these companies went on a little bit of a run on the market. So that's one of the things that's contributing to that. And then there's some new companies that have started to materialize and spawn out. We have roughly, as of the beginning of June, about 99.5 million shares out. So that puts our NAV per share of around 86 cents. So this chart, we're recording this. We're also planning to present this in a portfolio tracker method on the website so that investors can keep track of it. So when we do updates on it, we're able to make it easier for shareholders to have followed this. So 1 second. Stop the share here. So give me a second, guys, here. So I want to okay. So I want to go to to some questions right now, because I know that investors sent in about a bunch of questions. What I'm going to do is I'm going to start off with the questions that have been sent to us. First, give me 1 second. Sorry about that, guys. I'm just pull up. I'm just going to get all the questions live out here. There's some that have come in on the chat. Okay, there's a quick question here that I'll get to that's in the webinar chat. One question that I have always has, how does VSQTF, other than NAV, get value from all of these companies, which only goes to the balance sheet? Does income from the companies contribute to annual earnings of VSQTF in any way? It seems like our earnings per share is what keeps VSQTF down, as our EPS has been negative, so we need income. Okay, this is a really good question. So our business model is really based more so on NAV growth, cash invested, the value of those assets, and the return on value. That's always kind of been our focus. And either we haven't done a good job as a management team, or the not enough people are, or there hasn't been enough, let's say, enough of a successful track record in the spin-offs performing well, which would allow people to feel more comfortable with, let's say, the NAV as a valuation. But that's our core business. So as the NAV grows, our goal is to double the NAV every 3 to 5 years. And as those companies spin off, we have the option to sell off a position, like I mentioned, sell off our principal plus 20% to reinvest in top of funnel, sell and just take money off the table just in general, or leverage by borrowing against some of those assets to kind of grow the portfolio. That's the business model. However, when you look at our balance sheet and income statement, there are certain investments that consolidate. So when you look at our numbers are a consolidation of Hydrates, XR Immersive, currently the Future Health company, but that'll change once it's spun out, and a couple of other companies internally, because we own a majority share or over 50%. So when you look at our financials, sometimes they're confusing in that it includes cash, revenues and expenses and liabilities for some of those companies. One of the things that we've heard investors say over the past couple of years is that it's important for VST to have, to show its own revenue that can kind of cover and control its burn. So one of the things that we've been focusing on, and I mentioned as we went through the chart, was the purpose of VictorySquare Digital Health is for that purpose. We wholly owned, it's IP, there's licensing revenue that we're getting. And we're using that as an example of a company that can provide cash flow, again, to cover any sort of burn that VST may have on a basis, on a month-to-month basis or annual basis. The challenge with the EPS side, though, is, as anyone that's followed our share price, it's great when the value of the portfolio companies are going up, like in 2021, where you see a growth in EPS and a growth in net income, but unfortunately, it's not a true paper gain, like a cash gain. And then two, when the value of those portfolio companies come down, as in 2022, you see the value of the EPS in negative territory and the net income in a negative territory. For us, we have to look at it in 3 to 5 year periods because you see that the markets kind of cycle that. One of the interesting things about VST today is that the markets have been in decline for a couple of years now, and so a lot of that bleed and a lot of that growth is kind of gone in the negative direction, where we're seeing a bit of an inflection where it's heading into heading the other way. And I think the real big validation for us will be as the companies perform well. So if Hydrate continues to perform well, obviously it's not performing the way we want it on the share price perspective. Again, very thinly traded, but we'll pay more attention to that. But as the companies like XR Immersive, Game On, Hydrate, perform well in the market, that will most likely give more confidence to investors in the rest of the portfolio. So that's something again that we think will happen over time. Go to the rest of the questions. Okay, hold on. Okay, so your shares are trading at a steep discount, even after being discounted by your third-party pricing agency. Why is that? So, again, I think it touches upon what we mentioned before. One, primarily investors, unaware of our holdings. So this idea of a portfolio tracker and providing more information, I think, is a great way to show more transparency on what we own, how it's priced, which, will improve the knowledge of any investors that are already investors or looking at VST or, come across VST. And I think as long as we continue to provide this information on a more regular basis, I think it'll, this disclosure where I think we'll give more data points that will, hopefully help shrink the discount that we're currently trading at. And secondly, again, I think the biggest thing will be our portfolio companies or our spinoffs performing well. At the end of the day, we know it until those companies rebound and and show investors that they're great on standing on their own and there's significant value. I think we're that'll be the biggest catalyst to that growth. How does your third-party pricing agency price the private investments? 3 methods. They use the market approach, so mark to market, income, and cost approach. Those are the 3 ways that they do it. And in some cases, they'll do a discount for liquidity of 10 to 25%. What companies is VST most focused on? I would say there's 2 categories of companies we're most focused on. In the first category, Hydrate, VSDH, VictorySquare Digital Health, VictorySquare Health, the Future Health Company, Game On, and XR Immersive. These are key because these are large holdings we have, and we're more actively involved in the day-to-day side of these businesses. The other 4, I would say Stardust Solar, which will be spun off later this year. We're bullish on that sector and space. They've been continuing to grow. There's going to be a good update coming out from them very shortly. And anyone that's looked at the public market side, check out a company called Solar Bank. because Stardust Solar is very similar to that company. That company's traded really, really well. So very bullish on Stardust. Copilot.ai, again, great management team, great company. Covalent CQT, same thing. Fans Unite, just because it's been one of our, our oldest portfolio holdings. It's unfortunately gotten smashed, but we're hoping that we have a large holding in it. It's been in the portfolio for a long period of time, so that would, I think, fall in the category of the other four. And then I would say, outside of those 10, really we're bullish on some of these projects that we're incubating. So I'd mentioned, security, privacy, and safety, cybersecurity, AI, data protection. That's an area that we think is going to continue to grow, and we believe that we've got something special there. And then the women's health space is where we have a project coming out of stealth in the next 90 days that we're focused on. Share ownership. So there's a question on share ownership. So for VST, I've never sold a share of Victory Square. My ownership, I've been buying back stock. I was in a blackout period for I think the past week or two, but anyone that's followed, I've been buying back stock on a regular basis. A percentage of the traded volume in Canada. I think my ownership is probably 15-16%. Then I would think we probably have 3 to 5%. Management probably owns another 3 to 5%. Our portfolio companies, this is really key too. So our portfolio companies and the entrepreneurs behind our portfolio companies, who also act as advisors and share best practices within our ecosystem, probably own about 15%. We did a 52-cent financing at the end of 2020. So that probably represents about 12%. We have one family office who's been in the stock since 2017, which owns about 5%, and then there's a float of about 45%. So pretty good cap structure. But some of the big advantages there, I would say, is one, management has skin in the game, so there's an alignment. You're not buying into a company where we've got hired guns on the management side. We are blood, sweat, tears, and money in this, skin in the game. Two, the fact that the portfolio companies own equity, this is really important because they have a significant benefit in the company Victory Square doing well, the parent doing well. So they're able to provide best practices, share ideas, customers, pain points to the rest of the ecosystem, and I believe this is one of the key advantages that gives VST an unfair VST portfolio companies an unfair advantage to grow. This next question is around the wild swings in our stock over the last couple of years. So anyone that's followed our stock, so 2017 is really generally kind of the inception year. We saw a big bump in 2017. VST and myself have always been early in the blockchain and Web3 crypto space. And in 2017 and early 2018, that sector popped, and as did our share price. So we saw a lot of interest in Victory Square at that point in time, but really more based around one theme, which was blockchain and the price of Bitcoin at that time. And we also saw when the crypto went into crypto winter and towards the end of 2018, our share price kind of declined. So investors came in for one thing, but we had a lot, and they left, after that theme kind of died down. One of the key things in 2018, though, was we leveraged our share price to make a lot of really good strategic acquisitions when the share price was trading over $1.20. We never sold stock. I never sold stock during that period of time, and I also actually converted probably $800,000 to $1 million at I think over $1 a share. So interesting that the volatile swing of the share price going up and down was around one theme. This happened again in 2020. So in August of 2020, one portfolio company. So we've always had exposure to digital health and personalized medicine since 2017, but one company, Victory Square Health, SafeTest, also doing business as SafeTest Diagnosticos, got an approval for its rapid COVID test in August of 2020. Huge interest in VST at that point in time as well. Huge volume, share price jumped. And then when the share price was trading at a premium, though, we did a number of things. So we used our stock to make some acquisitions. So we acquired Hydrate during that early 2021. We did a financing at the end of 2022 at 52 cents a share. We made investments with stock in Stardust and Creator.co. So again, when we saw lots of volume around one theme, but again, we were also at that time in Fans Unite, in Game On, in VRAR. So in a variety of different sectors, but that one sector got super hot. And that wavered off in 2021 as the rest of the market did. But we were very aggressive when the share price was trading higher. So, what that also tells me is that we now have, so many anchors in so many different sectors that at any point in time, one sector might get hot. So right now, AI is buzzing, and I don't think a lot of the market knows that we've been working on this. And anyone that goes back to our videos or decks from 2016, 2017, like it's always been a core part of our IP. So I think as we start sharing some actionable items that are happening within our portfolio company or the companies we're incubating, I think those themes will benefit, whether it's AI, cybersecurity, digital health, longevity, biohacking. These are all areas that we have a presence in. So just like that it happened in 2017, early 2018, or in 2020, it could happen again. And it's funny, those, every 3 years, right? Like we seem to have a big catalyst and an inflection. So, interesting note. I didn't think about that 3-year thing, but hopefully that answers the question. Question here on corporate structure. So this question is around like number of employees, burn, cash flow. How does VST, plan on surviving? So again, we've got a very, very strong cash and liquid securities portfolio, over 24 plus months of runway, very, very lean. But to put this in context, we probably have 3 full-time employees and a handful of contractors. So, and that, that with office and, all of the, D&O insurance and all these different types of costs that we may incur, I think you're looking at around 70K burn a month. And so again, very, very lean burn. A lot of those costs are covered through, back office services we provide for our portfolio companies. And then in the case of, if we need to, as we sell off some of some assets that we, try to recuperate our cost plus 20% on, we're able to kind of reinvest into into covering any sort of shortages we may have. And we also have, I mentioned in 2016, or we set up a convertible note, so by myself. So if the company ever needs funding or funds, we're always able to kind of provide that to them for investments, growth, or anything that we need. So we don't have a high employee count, very low burn. And just to note, that burn, we're expecting it to be covered by cash flow at the beginning of next year. I mentioned some of the portfolio companies like VSDH, which is wholly owned. We plan on some of the licensing arrangements to generate enough to cover all of our costs at that time by 2024. What criteria would the company use to determine if it should sell a position in one of its companies? So again, we talked about this. So we have generally we like to recover our cost plus 20% for each year we've held the investment. Sometimes we don't. Sometimes there's portfolio companies that we're not really actively involved in, and we may look to kind of liquidate our position. We did that with Argo blockchain in the past. And so, yeah, normally, cost plus 20% for every year we've held it. And if we're not active in the business, we'll look to kind of lighten our position in those investments. Then in some cases, like, I mentioned with respect to Hydrate, we also incentivize staff and contractors and consultants to sometimes come and to provide value without having to use cash. In some cases, if milestones are hit, we utilize shares at a premium to offset those costs. Obviously, we want to maintain as much of an ownership stake as possible. And two, sometimes like it's more beneficial for us to just use some, the shares, not in VST, but shares in our portfolio companies, if they're at a premium, for instead of using, VST's cash. What other opportunities for VST are you most excited about? So I would say there's 5 major catalysts that we're super stoked about. One, Hydrate growth. So Hydrate's on track to do about 16 to 18 million in top line revs this year. Super bullish. We think it's significantly undervalued. And as they hit those numbers, like they just finished, they're going to be finishing Q2 at the end of June. We're excited about how well they've done over Q2. This will be a major catalyst. The more data points they get out, the more traction they get, more interest they get. That's going to unlock value for VST, because again, people will see that VST is behind it. And in theory, you could own Hydrate by owning VST shares. So super bullish on that. Super excited about the spinoffs. So Stardust Solar and the Future Health Company are on tap for this year, hopefully very shortly. And I mentioned in the case of Stardust Solar, you look at SolarBank. This is a company that's kind of on par with Stardust Solar. So very, very excited about them listing. And in the Future Health Company, they're dealing with, food, biohacking, longevity, those sectors that, we think have tremendous room to grow. And it gives us a really, really important business in that category. So excited about that. Also, portfolio company growth. So I mentioned some of the companies that are incubating, that are in stealth right now around digital health solutions, around women's health. We're super excited about growing Victory Square Digital Health. So there's 2 services, a dispatch service and a weight loss platform, that are going to be coming out shortly out of Victory Square Digital Health. So just the portfolio growth around that, it's wholly owned. Super excited about that. Turnaround, one of the things that's been challenging for us, and we feel bad for shareholders, is XR Immersive has had a very challenging last 18 months. There's been a board turnover, management turnover, and just poor lack of communication, to shareholders. This is something that we want to change. And they're working on some really exciting things. So we're going to be getting more actively involved in that business. And we're expecting, some restructure, some better communication, and some new IP that they have that we're going to roll out. And it's important for us because, we own, I think, over 50% of that company. So it's important for us that it does. NAV growth. So NAV, as of the beginning of June, sat around 85 million. We've said before, we're targeting around 127 by the end of this year. So we think that's another catalyst that we're excited about. And then the share price. So, there's a lot of momentum right now, a lot of good things that have happened over the first 6 months of this year. We think that that momentum is going to grow for the next 6 months. And we're excited to just get more eyeballs, whether it's through the portfolio companies performing well, or just us, again, more transparency with the portfolio tracker so people can track this on a better basis. Or 3, just us getting out there more and talking to more and more investors. We think that we're excited about, continued growth on the share price. Why should people invest in VST today? Well, the number one reason is entry point. We're all investing to make money, and we've got a share price of around 15 cents or 17 cents, sorry, with a market cap of 15 million and a NAV of 85. So we're trading at a significant discount. This is a great entry point. Probably an 80% discount to NAV right now. So that's one big reason. I feel like investors get access to an innovative portfolio of innovative and disruptive early stage companies. So we're not a one-trick pony. You're diversifying it's a risk adjusted investment approach. You've got anchors in a variety of different sectors and space. Experienced leadership, active investment management. Like I said, we're actively involved, skin in the game, experienced track record over the last 20 plus years in the tech space. And we're public. So it's not like you're getting access to an early stage company that's private, not audited, and illiquid. Here, we're trading on 3 exchanges in Europe, in the US, and Canada. And so there's liquidity. So, you can either like what we're doing and invest, And if you fall out of favor, you can, sell your position. So you can punish management if you're not happy, and you can reward management if you are, as opposed to being stuck in a private company. And that's one of the big things is Victory Square was set up to democratize access to these next emerging companies. We want every retail investor, whether they put in $500 or $5,000 or $500,000, to be able to get access to these companies early. I just realized we've gone over time. Give me a second. Let's see if there's, try to squeeze in a couple of other questions here. Okay. You have a lot of IP on your NAV, but you don't have a large staff. What are you doing to progress the IP in your portfolio and prepare it for commercialization? Great question. So here's one of the, again, the biggest advantages we have. We have a very, very lean parent company balance, like operations and expenses. However, we have a massive base of advisors that contribute to all our portfolio companies. So there are advisors, for example, I'll give you a couple, Dr. Tom Elliott, who runs BC Diabetes here, anything in the digital health sector and space. Ahmad Shorbaji, again, a leader in the digital health sector and space that can plug in into anything that we're working on the digital health sector and space, whether it's trials, regulation, governance, or Dr. Fakhri Karai, who runs the Waterloo's Institute for Machine Learning and AI, the MIT of Canada. If anyone's followed, University of Waterloo, to provide guidance to any of our portfolio companies. So this is a huge value, that we don't have a CapEx cost to the fact that we can tap into Game On, Fans, Hydrate, any of the, Copilot, any of the portfolio companies that focuses on something. If it's digital health, or let's say it's sales automation, we can go to Copilot. And all of these founders and team members are motivated by the fact that they own shares in VST. So there's an incentive there. But if they perform well, there's a compensation that's provided through either shares or cash from the portfolio companies or the incubated ideas. And so, we're able to work on all this IP because a lot of this IP comes out of pain points within a particular portfolio company. So we already got access to a team that will work for equity as opposed to cash, and they're more incentivized to do that and to prepare it for commercialization, because again, that IP is being built specifically from a pain point that we've seen. That's why in the chart, NAV chart, we're very excited about the digital health IP that's being incubated, because it's being incubated from pain points we're seeing in a Hydrate and VSDH. So we know there's a market for it, and the staff in those businesses know there's a market for it. So they're incentivized to take equity to do what they're already doing. But just to talk about one other thing within that. What income will VSQTF get with any of these spinoffs in 2023? Will cash come in the door at that time? Are there expenses that will hit with the spinoff? Okay, good question. So in 2023, I don't believe in the spinoffs of the Future Health Company, formerly known as Draft Label, and Stardust Solar, there may be a non-cap on the Future Health Company. Stardust, there won't be any sort of costs associated with or expenses that hit our balance sheet on that. But I think there may be one from the Future Health Company. And anyone that looked at Hydrate, so there was a non-cash expense, which wasn't a cash expense. It was, I guess it had to do with like the spinoff or how things were valued. And this was an accounting thing. Because the Future Health Company was wholly owned prior to this spinoff, at spinoff, there may be, again, a non-cash expense that hits the balance sheet. But I'll have to, the question is from Ted. Ted, I'll get an answer to that specifically, and if there is one, and what that number would be, and I'll post it on the Discord channel. But as far as I know, there shouldn't be one on Stardust, and there might be a little bit of, again, non-cash expense for that. From an income perspective, I don't believe we'll see income from either of those two on our balance sheet, because the ownership will go under a consolidated threshold, so I don't think they'll be consolidated. We do expect income in 2023 to come from Hydrate and VSDH. I think those will be the two main drivers. And XR Immersive, those three will be the main drivers of income and expenses on VST. I think that's that's it. If there are any more questions, please feel free to share them. Thank you everyone for tuning in. I hope we were able to share more information and dive a bit deeper into the NAV. We'll record this, we'll post it. We'll also again get that portfolio tracker onto the website so people can track it on a more regular basis. If anyone has any more questions, again, please feel free to post them on the Discord channel or email them to ir@victorysquare.com. Also, I know there's one comment, someone was saying that I was going silent on pushing out content. It's just because we got super busy, but started to push up more content on LinkedIn. So if anyone's on LinkedIn, follow me, because you'll again see a lot of the spaces and sectors we're in. We're posting out content around that. So I hope everyone has a great day. Thanks again, everyone, for tuning in.